I am Aaron Matthews. I'm an associate in our insurance team. And just as I have mentioned already, but if anyone has joined since I started talking, some housekeeping points. The webinar is being recorded. It will be available afterwards on the Mills & Reed website and YouTube page. And if anyone has a question, there is a Q&A box, and that will go to my colleague Harriet Strevens, who will then be able to feed those questions back to me at the end. If anyone's got any more detailed questions they want to ask, my details will be on the final slide by email as well, and you're more welcome to ask questions that way. So just a brief agenda to cover at the beginning, what we're going to discuss today. You can't really talk about Brexit, the impact on insurers, without discussing passporting rights and what's happening in passporting rights. And as we will come to talk about the likely loss of these for UK and EEA insurers. So we're going to discuss that and what the impact is. We're also going to have a look at some of the transitional provisions that are in place for UK and EEA insurers, and what, if anything, can be done to mitigate the impact on that from both sides. So just to remind everyone where we are now, and you'll be forgiven for forgetting this given the very monumental events of this year. So the UK left the European Union on the 31st January 2020, and it then entered into a transition period. So although the UK is no longer an EU member state, EU law does continue at the time of doing this webinar to apply in and to the UK in exactly the same way as if it were an EU member state, and it will continue to do so until 11 o'clock on the 31st of December 2020. So at the time of doing this talk, we are 5 weeks away. There is the option for that to be extended, but there doesn't seem to be a huge amount of political appetite for that. So what the relationship is going to look like after that, still the subject of ongoing negotiations, still unknown. So the content of this talk is, to a degree, necessarily speculative, but the impact on insurers there's a general consensus of what it's going to be, and it would be quite surprising if it were any different from what we're going to discuss. So as I said at the beginning, we're going to discuss passporting rights, the first topic, and so I just want to set out for everyone what these are. And in summary, what a passporting right is it is a mechanism by which a insurer or a broker that is authorised and regulated to conduct activities in, say, the UK, can conduct those regulated activities in any other EEA member state off the basis of that authorisation. So UK insurers need to be authorised and regulated by the PRA and the FCA. And at the moment, with passporting rights, if they have that authorisation, they can then do those business activities, those regulated activities in any other EEA member state without the need for local authorisations or licences. Just to clarify what we mean by EEA, it's the EU plus Iceland, Liechtenstein and Norway. And as I mentioned briefly, the likelihood is that these are going to be lost. So whilst it's still the subject of ongoing negotiations, there is a general industry consensus that this is what's going to happen. So the European Commission has set out its stall quite clearly in the notice that link there, that passporting rights are expected to be lost. The European Banking Authority is saying the same thing. The national regulators in the UK, the FCA, are saying the same thing. And that is a consequence, really, of the UK's decision to leave the single market in combination with the EU's negotiating position, which is you can't necessarily cherry pick things of single market membership that you want whilst leaving things behind that you don't. So it limits the scope for bespoke arrangements on financial services. So it's not expected that passporting rights will be retained. So if passporting rights are going to be lost, what does that mean? Well, it means that for UK insurers, they're going to need authorisation and regulation in the EEA state in which they want to conduct business. They're no longer going to be able to conduct that business off the back of their FCA and PRA authorisation. Same applies for brokers with FCA authorisation. Same applies for EEA insurers who want to conduct business in the UK. They will need authorisation and regulation by the local regulator in the UK. They'll need authorisation and regulation by the PRA and the FCA. And there's a risk risk of committing criminal offences and civil administrative sanctions if those requirements aren't adhered with. And the difficulty for UK insurers is what those regulatory requirements are going to be is going to depend on each individual member state. They're going to necessarily vary. And just a brief case study of some of the complications that can throw up. In 2019, the European Insurance and Occupational Pensions Authority, EIOPA, which is a supervisory body that advises the EU Parliament and the EU Commission on issues that affect insurance policyholders, they issued a number of recommendations to try and minimise disruption that would be caused from the UK leaving the EU and going from passporting rights to no passporting rights. And one of those recommendations was that it would be simpler and easier if the location of a risk was fixed from inception, from the outset. However, the French regulator, the ACPR, and that does have a long French name, which I'm not going to try and pronounce this morning, but they have said that under French law, their view is that actually the location of the risk will move with the policyholder. So what I'm trying to demonstrate through this case study is, whilst recommendations have been made by a supervisory body in the EU, EIOPA, this is ultimately a matter for individual national law and how each member state wants to apply it. And for France, that might cause some complications. So it might cause complications for UK insurers who are not otherwise engaged in cross-border business, where they, for instance, write a policy for a UK insured and that insured moves overseas. There may still be implications that an absence of passporting rights may still cause some problems, but ultimately the point I want to make is it is a matter of national law, and it's going to depend for UK insurers on which state they want to conduct their business. So that sets out, I hope, the position with where the UK has passporting rights and what happens if it has lost them, and the same for EEA insurers on the other side. So a question that arises is what transitional provisions are being put in place to perhaps smooth that distinction. And for UK insurers, the answer is, unfortunately, again, it's going to depend on which member state that you're dealing with. So the examples that are set out on the slide there in overview are intended to demonstrate that there are transitional provisions in France and Ireland, but they're both slightly different. And the FCA's advice on this is that some countries haven't committed to putting in transitional provisions at all, transitional regimes at all. And not all transitional provisions that have been legislated for in EEA countries were intended to apply at the end of a transition period. Some transitional provisions were intended to apply in the event of a no-deal Brexit, where there was no transition period at all, so at the beginning of this year. And so the FCA's advice for UK insurers is you need to engage with the local regulator in where you're doing business and discuss what plans you have, because the position will differ between countries. For EEA insurers, it is a bit simpler. The UK Parliament has legislated for the temporary permissions regime. And what that basically means is that EEA insurers and brokers will be able to carry on their business for up to 3 years in the UK without having obtained full regulatory authorization in the UK. But the important point to note with this is it's not a system of automatic enrolment. If people want to make use of the TPR, if firms want to make use of the TPR, they need to have ensured they have taken the steps that are necessary to enroll. And that involves making a valid notification to the PRA, but the deadline on that has passed. But if people are still intent on using the temporary permissions regime, for insurers, they can submit an application for permission to conduct regulated activities in the UK under Part 4A of the Financial Services and Markets Act 2000. So that will enrol you in the TPR. And brokers, and the FCA has opened a notification system via its Connect system. That's open until the 30th of December 2020. Important for both insurers and brokers is to recognise that firms that have not notified, have not made conducted those requisite steps, won't be able to use the TPR. The other transitional provision that's relevant for EEA insurers seeking to do business in the UK is the Financial Services Contracts Regime, or FSCR, and it's basically a run-off provision. So for pre-existing policies that have been entered into by EEA insurers with a UK insured prior to the end of the transition period, those can be run off. Important point to note with the with the FSCR is it's not a replacement for passporting rights. So the permission that's granted by the FSCR is limited. It's strictly limited to the extent that's necessary for the performance of a pre-existing contract, and it's also time limited to a maximum of 15 years. But it does apply automatically in most instances. So if that's going to be the change, then what the question arises, what can firms do to mitigate it? And the short answer is it's very difficult to replace something short of legislation or an agreement at national, international level. So the options are pretty limited. Most London market insurers have already conducted this step where they have set up an EU subsidiary, and that is the primary means by which this change, the impact of this change, can be mitigated. If you establish an EU subsidiary, i.e. a corporate entity in a member state of the EU that's not the UK, that corporate entity, if you get the authorization and regulation from the national regulator, will it will benefit from passporting rights. So just to clarify, that's distinct from a branch, so it's not the same as simply setting up an office in another country. It does need to be an entity that is incorporated in another country, a European company, in order to benefit from passporting rights. And of course, that has some drawbacks. It takes time, it's costly. Most national regulators have made clear that they can't simply be letterbox entities. There are going to be requirements in terms of staffing, management, capital. So it's costly, but it is one of the primary means by which this change can be mitigated. And the other point to take in mitigation is a transfer of existing business from a UK entity to an EEA established entity. And point to note with this, though, is just it's a particular procedure under Part 7 of the Financial Services and Markets Act 2000, and it takes time. So in order to transfer your business cross-border, it will require the permission of the court. Realistically, it'll take 6 to 9 months to complete. The UK Parliament has legislated to allow a saving provision. That means that transfers can occur still within 2 years of the transition period ending. But the transfer scheme needs to have been entered into before the end of the transition period in order to benefit from that. And it has other drawbacks, because when the UK leaves the scope of EU law entirely at the end of the transition period, recognition of that transfer is still going to be required by the national regulator. So simply because the UK Parliament has said this is okay and we can authorise transfers over the next 2 years, that's going to require the EEA regulator in the country that you're transferring to sign off on that. And the FCA's advice is, again, to engage with national regulators on that basis. The other point that I just want to mention in mitigation is equivalence, because it's something that's come up in the business media over the past few weeks. What equivalence is a creature of EU law where third countries, and what we mean by third countries is countries that are not EEA, EU member states, where third countries' financial and supervisory regimes are deemed to be equivalent. They are deemed to be the same as the corresponding EU regime. They are given certain privileges, certain market access. So if the UK's financial and supervisory regime is deemed to be equivalent, it will be given certain limited rights of market access to the EU. Now, perhaps the best way of demonstrating this, what it grants, but also what it doesn't grant, is to look at what Solvency II grants insurers if the UK would be deemed to be an equivalent regime. That is still something that has not been decided. It would grant UK insurers a right to be treated preferably in these 3 distinct areas on the screen. So, for instance, reinsurance contracts, UK reinsurers would have to be treated in exactly the same way as EU reinsurers. But the point I want to take away from this slide is what isn't granted by it is a right of direct market access for direct insurance. So even if the UK, at the end of the negotiations, is deemed equivalent for the purposes of insurance, for the purposes of Solvency II, it's not going to replicate passporting rights. It's not going to allow a UK insurer to write direct business cross-border. It will provide certain rights in these 3 areas, but it will not go beyond that. So the short answer is equivalence going to mitigate the loss of passporting rights? It's not. And the problems of equivalence just set out on the screen there. There's some others that I haven't mentioned, but points of interest. Equivalence is something that is granted at the discretion of the EU Commission, and it makes it quite a political tool. It can be taken away. So if the EU Commission decides that it wants to remove that equivalent status, that can be done, and it would likely to be done if, say, the UK diverged in regulations down the line from the EU. And associations like the ABI have expressed their concern that that's not a solid basis on which to do long-term business because of that inherent temporary nature of it. And the FCA has just general advice beyond that, which is insurers and brokers, they need to be considering what cross-border business they do and think about the contingency plans if they haven't already, what other contingency plans are needed, and discuss those contingency plans with national regulators, as that have been the theme that will have come through this presentation, hopefully, is that for UK insurers and bodies, it's very much going to be a discussion with individual national regulators unless you have incorporated a EU subsidiary and transferred your business to them. And you should also identify customers affected and just ensure they are treated fairly. The FCA has a lot of information on this, and some helpful links are set out on the next slide that I hope people might find of use, because this has been a bit of a whistle-stop tour. So that covers the points that we set out to discuss today. So thank you very much for listening, and I'm just going to hand over now to Harriet Strevens, my colleague, as to any questions and whether they have come in. So.
Thank you very much, Aaron. I have a couple of questions which are slightly open-ended, but I think the listeners would like to hear what you have to say if you have a view. The first one is, do you think that national countries' regulators are likely to follow EIOPA's recommendations, or whether they're likely to adopt a similar approach to the French regulator and approach these differently?
So I think the answer to that is, in most instances, from what I've seen, so if we go back to the previous slide, there is a table actually set out there of EEA regulator responses to EIOPA recommendations, and in most instances, EEA regulators are following them wholesale. But as the example in the presentation has set out, it's not a guarantee, and also some of those regulator responses were, well, we will legislate for this, but obviously, where things require legislation, then they require the determination of national parliaments. They have to go through a national legislative process. So the long answer is probably yes, but the example in this presentation shows it's not a guarantee, and to be sure, you don't want to fall foul of being the exception to the norm.
Thank you. Thank you very much.
To check with national regulators.
Thank you. How about your feelings of any prospect of the majority of the EEA member states agreeing similar transitional period provisions to the UK if they've not already done so?
So it's probably a similar answer in that the FCA's advice is not all national governments have done so. So whilst I think that there is a general commercial acknowledgement that insurance policies are going to need some sort of run-off provisions, some sort of transitional provisions in place, the FCA's current advice is not all national governments have done so. And again, it's important to check with the individual member state that you are concerned with.
Thank you very much. We do have a couple more questions, but I think given our requirement to try and keep these sessions to 15 minutes, we'll conclude at that stage, and I'll leave you to deal with those through the email process. Back to you, Aaron.
That's absolutely fine. And yes, thank you for those who've sent in questions that I don't have the time just to answer now. I'll pop my email will come up on the final slide, and I'm more than happy to address those that I can by email after the session. Once this session is finished, there will be a feedback form on your screen. So I'd be very grateful if people can give us a bit of feedback, just let us know how we did today, and let us know also what future topics might interest you. And thank you very much for that. So thank you very much for listening. As I said, if anyone's got any further questions, those are my contact details up on the screen there. And just to introduce our webinar, our next webinar, it'll be on the 3rd of December with David Gooding. and it'll be on the minimum terms and conditions for accountants. So I do hope that those who can will be able to join us on that occasion, and that you have a very nice rest of the day. Thank you very much.